This is an RNZ podcast.
Hello and welcome to this episode of Your Money with me, Mary Holm. Thanks for taking just a few minutes to listen in while Jesse Mulligan and I talk through some useful ideas about how to make your money work better for you. Just remember though, this is guidance. Final decisions are up to you. Over to Jesse.
And I'm joined by Mary Holm, who has also brought in Mary Holm's new book, which is called A Richie You, How to Make the Most of Your Money.
Yeah, it's just coming into the bookshops in the next few days.
Well done.
Hopefully it's been sort of stuck down on the wharves in Auckland, I think.
Oh, yeah.
But I'm kind of excited about it.
What's the angle?
It's basically built around real people's stories. It's built around the Q&As in the Weekend Herald column. So the point of it is that ordinary people, things aren't always clear cut financially for real people out there in the real world, you know. So there's all kinds of situations people find themselves in where you don't quite follow the rules, and so it's based around real stories of real people, and there's some bits that are quite sad and some bits that are quite funny, and all sorts of quirky stuff in there, that I think makes it a more interesting reading than just reading straight financial rules, really.
Yeah, great.
Yeah. And the publisher's given me 5 copies to give away to your listeners, Jesse. So the idea is people have got to earn this. So they have to email to me in 12 words or less why they think they should win the book. And so 12 words or less. If you do 13 words, you disqualified.
Yeah.
I thought
Mary will only read the first 12.
That's right. Yes. Stop right there. So, we've done this kind of thing before with book giveaways, and something funny or something sad or a little poem or something like that is kind of what catches the eye. I've decided to say by midnight on March the 20th, because I know quite a few people listen to this on podcasts and they don't necessarily hear it today, so to give people a little bit of time to do that. But really importantly, can everybody please put RNZ book as the subject? Because otherwise I get all these other questions coming in and it could get lost in the flood, really, yeah. And if you can send them to me, so that's mary@maryholm.com, so MARYHOLM, all one word, .com, and we can announce the winners next time.
Sounds perfect. She'll be back in 2 weeks, Mary will be.
Yes.
Before we continue with today's topic, let me give you a link 3 clue, because I can't see anyone that's got close yet. Your clue is that the 3 songs, the answer is something to do with other songs. Something to do with other songs.
What?
Yeah. Hope that helps you, and I'll give you a more obvious clue in a few minutes if we don't have any luck. Emergency money, Mary.
Yeah, I have to just say too, I enjoyed listening to your thing about Pete Sinclair, who used to call himself Mrs. Sinclair's little boy Pete. And I was very, very young, of course, but I used to enjoy Pete Sinclair.
Yeah,
he
cool.
was
New Zealand
cool.
broadcasting icon, wasn't he?
Yeah, he was. He was fantastic. Yes, yeah. Emergency money though, which is slightly more serious. I was looking back, we haven't really talked about this in any depth for about 2 years, and look what's happened in the meantime. And so a lot of people are sort of suddenly realising what bolts can happen out of the blue. And a lot of people, I don't think, did have much money they could latch on to if they needed to, if they lost their job, or they've got their own business and the business income's going down, or for all sorts of reasons, people are possibly feeling more insecure now than they were. I think it's the second most important thing for people to do. The first is to get rid of high interest debt. You know, if you've got credit card debt or any other debt that's got a higher interest than mortgage debt, it's got to be your first priority. It's so horrible. But after that, it's really a good idea to set up some kind of rainy day fund or emergency fund. After all, when things go wrong in your life, you don't need financial trouble as well. It's often when people need to call on this money is when a health problem's developed, or the roof's leaking, and quite apart from the money, the roof leaking itself is quite a problem, and all kinds of things that happen in people's lives, and
you're going to be stressed out enough by whatever is happening.
Yeah.
Let alone trying to raise some money at the same time.
That's right. I mean, it might be the end of a relationship or a death or a disability or awful things that happen in people's lives, and they do, and it's really helpful to be able to say, well, at least I've got a few $1,000s I can reach to handle this financially in the meantime. So it's sort of there are two reasons to do it. One is just the financial, but the other is kind of the psychological, knowing that you've got access to some money there, and then being able to call on it. How much you need? I heard when you were promoting this segment that you said, Mary's going to tell us how much you need, and I thought, well, how long is a piece of string? It's
the most stressful element of Mary's life is hearing me promote what she's going to talk about.
Because I think, what's Jesse told people I'm going to say now? Can I fulfil this promise?
Yeah. You'll confirm that it's 99% accurate, Mary. I'm not making up stuff every week.
No. You don't ever put me in a total spot there, Jesse. No. How much you need. I mean, some people say 3 months' income, and I've even read people saying 6 months' income, and I think that's totally unrealistic for most people. And what's more, emergency money, rainy day money is money you kind of want to have fairly accessible, and that means almost by definition that you're not going to earn a very big return on it, because high return money, which is money you put in, say, share funds or rental property or something like that, is not the kind of money you can get access to short term.
Yeah.
So there's always a trade-off there between how much return you can get on money and having it accessible. And so how much also depends a heck of a lot on what sort of insurance you've got. I mean, if you've got life insurance and loss of income insurance and car and house and all of that, then a lot of the things that go wrong, you've got insurance stepping in and covering them. Whereas if you haven't got much insurance at all...
Are you keen on those sorts of insurance? Income protection, that sort of thing?
Yes, I am really. I think loss of income protection is really good to have, but I suggest people, you just get it for if you've lost income for 3 months or more, say, rather than if you've lost income for 1 month or more, because it's much cheaper. The premiums are much lower, so it only steps in if you're really in big trouble. Because the premium, with all of this insurance, there's the trade-offs between paying all the premiums all this time.
Yeah.
But getting back to rainy day money, another factor, of course, that matters is whether you've got family who could help you out either with gifts or with loans if things go wrong. And quite often siblings might be able to help you out for a while and you pay them back later, etc. So it does depend on your circumstances, but if there are listeners there who haven't got a lot of insurance and haven't got people they can lean on, and that, I just think even if you don't call on this money for quite a long time, just knowing it's there must make you feel a bit better.
Yeah.
Must make your life a bit easier.
Yeah, so it's an important question to ask is sort of how strong are your networks?
Yes.
Yeah.
That's right.
What might life look like if you did have to...
Yeah. I was just thinking as I was driving in, actually, that a family of adult siblings or just even a group of friends could possibly get together and say, hey, can we make an agreement here that I can call on you and you can call on me? I'm not talking about a formal agreement. I'm just talking about an understanding that particularly with siblings, perhaps.
Yeah.
Yeah.
I like that.
But if you haven't got a lot of rainy day money set aside, I really suggest you start by setting up an automatic transfer from just your ordinary bank account into a savings account of maybe $10 a week or $50 a week if you can do that. Whatever's not painful, but just set it up and start getting the money being transferred just into a bank savings account. And then as soon as it gets to $100 or more, then you can start doing something a little bit more interesting with it. Like 30-day term deposits are one obvious one. We've talked about that before, how if you've got a credit card, then you can put the emergency spending on the credit card, and within 30 days, you get about 30 days generally or more to pay off the credit card debt. And within that time, a 30-day term deposit will have matured, and you can...
You're going to have to explain that again to me more slowly.
So you've got your rainy day money tied up in a 30-day term deposit.
Yeah. So I'm going to put it in on the 1st of the month, and on the 30th of the month, I can take it out with
get it back out again, yes.
1%.
And in the
interest.
meantime, worst case scenario is that right after the 1st of the month, say the 2nd or 3rd of the month, you need to spend some emergency money, several $100s on something. But if you put it on a credit card, you generally get 30 to 55 days, I think, to pay it off.
If you pay, if you put your expenses on the credit card.
Yes. That's right.
So suddenly your card it breaks down.
Yes. You put it on the
credit card to pay for it.
Yeah. By the time you get the credit card bill and then have to pay it, you get the bill, but then you've got a few weeks to pay it. By that time, that 30-day term deposit should have matured.
Great thinking.
Typically. I mean, you could also just put it in term deposits anyway, and if you need to break a term deposit, you do lose the interest on it. But if that's only happening occasionally, that's not that big a deal either. You know, in the meantime, while you weren't using the money, it was rolling over earning a little bit of interest, not very much, I know. Looks like interest rates just might start sneaking a little bit back up again soon.
Watch out, Mary.
What's
making you say that?
As you know, I don't know, but I've just been reading a few different economists, and they're kind of tending that way now, I reckon. But that's not me forecasting, it's just saying it's a possibility, I think. Even if you haven't
it's not an impossibility.
It's never
an impossibility.
No, it's never. No, it's a bit more than that, I think now. Even if you haven't got a credit card, quite often you can do something and run up some kind of expense, and you get some time to pay for it anyway. You know, if you get a bill from somebody, you've got several weeks to pay for it. And so if you've got term deposits, hopefully they'll be maturing by then. Or you could ladder, if you've got term deposits that are paying quite a lot more, if you tie them up for, say, 3 months, then you can ladder your term deposits. You put them in, so you put a third of your money in now, a third of your money in 1 month away, and a third of your money in 2 months away, all into 3 month deposits. And it means that they start every month, some of it's maturing, if you get what I mean. That's one way to get slightly better interest on it. There are some bank accounts where you lose interest if you withdraw. So you get interest, but in a month, if you make a withdrawal within a month, you don't get interest that month. And they can be quite good for this kind of thing, because most months you're not withdrawing. So you're sitting there, A
couple of questions from people. Is it really worth putting anything in a term deposit with interest rates so low? Wouldn't an ETF, that's an exchange-traded fund with sharesies or the like, be a better return, says someone in Wellington?
Yeah, well, yes, of course it'd be a better return, but it'd be a much more volatile return. Exchange-traded funds basically a share fund, and the returns on average will be quite a lot higher, but they can go down quite a lot when the share, as happened, the share market.
So you might put your 3,000 emergency fund in, then you need it, and it's only worth 2,600.
Yeah, or even 2,000 or something like that.
Okay.
So you're running a risk. It's not a bad place for perhaps some. You could have a couple of thousand more readily available in term deposits, and then several thousand in something like that, an exchange-traded fund that you don't really expect to use very often
Sort of
at
stops
all.
being an emergency fund then, though, doesn't it? If you're not able to access it.
But, you can access it. You can get the money out.
Well,
it's just that it might have plunged.
Right.
So,
I love this one, by the way. Paul reckons you should have a short-term emergency fund, a small amount of real cash, for example, when the ATM won't work, like coins for parking and laundry fees, or a warm shower at the camping grounds. That's thinking, isn't it?
If you're in a life situation where to get a warm shower you have to go to a camping ground, then that's probably true. I've found that coins, I'm just not using them anymore, because you don't for parking anymore, do you?
No.
You key in your number plate.
I ran
your
out of
rate.
money in Las Vegas once, and it wasn't for any of the reasons you're thinking about, listeners. I just couldn't access my ATM, and I would have really liked a couple of 20s in my wallet then.
Yes.
Yeah,
Well, that's in another
scary.
country, and that's
Yeah,
possibly
separate matter.
So there's some. We before we run out of time here, though, I mean, one other way to get a better return on rainy day money is if you've got a mortgage, is to pay extra off the mortgage, which a lot of people should be doing at the moment because with interest rates so low, if you can possibly afford it, it's a good opportunity to pay extra off. And then arrange with the lender to be able to borrow that back if you need to. Now, I got a letter from someone the other day saying their lender wouldn't agree to that, but I think a lot of lenders would, and get it in writing from, it'll usually be a bank, saying, if I put extra in, can I get access to that money again? Because in the meantime, if that money's sitting in the bank reducing your mortgage, it's like you've earned mortgage interest rate on the money, which is still not very high, but it's better than term deposits. And then there's offset, redrawable and revolving credit mortgages, which we could go into more another time. But they're all various types of mortgages where extra money can be put in and taken out again, basically, is one of the characteristics of all these types of mortgage. And so it's really worth talking to your mortgage lender. If you've got a fixed rate mortgage and it's maturing fairly soon, go and talk to them about how you could set it up so that you could have access to some money if you need to, because that is a better place to park it than in bank term deposits. Now, did you have some more questions or?
No, that's all.
No, okay.
What's the minimum for a term deposit, asks somebody.
I don't even know, but I think it'll be pretty low. I think it'll be $100 or something.
Another one says, Mary should advise that older folk can easily access their KiwiSaver at short notice.
Good point. Yes, and especially if they're in a lower risk one. If you're in a higher risk one, then once again, it could be, you could be getting the money out when the markets are down. Can I make a couple of very quick points? One is interest.co.nz has got all the bank savings accounts, the ones that have bonuses on them, that kind of thing. So look at that and see who's offering the best deal. Term deposits and all that are all listed on there. And you can often do better with another bank other than your own. Another point is to set up a charity fund, which we've talked about before.
Yeah, remind me.
Where you decide you're going to give, let's say, $500 to charity this year, or $5,000 if you can afford it. At the beginning of the year, you set that money aside and say, I'm going to give it to charity. And then if during the year things go wrong for you that year, you just take the money out of the fund and charity ends up getting less. But it's kind of a way where you've already mentally spent it on giving it to charity. And so when something goes wrong and the car breaks down and you have to pull $500 out of it, you don't feel that hacked off about it really, because you'd already spent it, if you see what I mean. Yeah, and it means the charity does badly this year, but it'll do better next year. My final point, if you do have to raid your rainy day fund, please top it up again fast, because otherwise, you're sitting there being vulnerable again.
Yeah, what's that saying? When it rains, it pours.
Yeah.
Bad luck comes in threes.
Yes, all of those horrible negative things.
Okay.
Yeah.
Hey, great to see you, Mary. Could you remind people what the rules are for winning your book?
Yes. So you've got to email me, that's mary@maryholm.com. You can have a look on my website if you want to do it through there. 12 words or less, why you think you need the book, why you want to win the book, by midnight on March the 20th, and I'll be announcing the winners a few days after that when I'm next on with you.
Thanks so much.
Okay, thanks,
Mary
Jesse.
Holm. You can listen to this one and previous interviews with Mary